Uranium stocks had a monster May, and we're going to go through a few of these stock charts. Here we've got Denison Mines, DNN. It was up 17% in May, and it had its best monthly close since August 2014. So we've had our best close in 7 years for DNN. Another stock worth looking at, Energy Fuels. Symbol is UUUU. It was up 17.8% last month, and again, it had its best close since November 2014. So it's been 7 years, and you can see that we're putting in these nice arc shapes. You know, a shape like this. You know, this bottoming formation is very strong. Right there, we bottomed. We had a nice bottom channel. Now we're breaking out. So we're looking for higher highs here on uranium. The move has just begun. I know when I first started investing and I see charts like this, see, I didn't zoom out on the monthly chart. What I'd do is I'd look at maybe a weekly chart or even a daily chart. I'd look at it like this and think, oh man, I missed the move. It was $1.60. Now it's $6.40. It's it's gone up 4x. I'm out of it. Like, there's no chance I'm going to get any gains here. But the thing is, there's a lot of bullish things for uranium. I mean, first of all, if the Democrats in power want to go the nuclear energy route, they're going to have to obtain uranium. The other thing is a lot of these uranium energy companies have very low market caps, so it doesn't take a lot of investment dollars to move the price. Here we're looking at Peninsula Energy, and it had this crazy wick here in January, so it just doesn't scale properly. But if we just, I don't know, looked at the last 3 months or so, we can see that we've had a nice move up from this plateau of about 9 cents to 15 cents. Let's do it at a log chart. Let's zoom out just a little bit. Peninsula Energy, if I put it on a log chart, that wick high up there doesn't look so bad, but here it was up 46%. Peninsula Energy is a domestic, for the United States market, it's a domestic source of uranium. You know, the uranium supply is ever nationalized, or we have some type of tariffs on it. This is going to be a very, very good stock for them. But the thing is, this is a penny stock, so there's a lot of risk with a stock like this. Here's Cameco Corporation, CCJ. It's one of the biggest uranium companies out there, and it was up 18.8% in May. Now if we zoom out, look at this beautiful consolidation. I mean, we're talking a 15-year consolidation. I mean, that's crazy, right? Look at this. So here we've got, like, went up and it just kind of consolidated. I mean, from when if you look at it, you know, from a 20-year perspective, it looks like it just consolidated for a long period of time. Naturally, if you just looked at it from here, it just looks like it's been in a downtrend for a very long time. But that's how commodities tend to be. Commodities tend to go in cycles, and right now, right now is a great time to be buying into the commodities because of inflation and because of the way the cycles work. Now, we got a breakout. So if I touch the highs from 2007 to the high in 2014, we've got the breakout back in December. We've had a strong impulse up. Now, if we touch the highs from 2007 to 2011, we haven't reached that point yet. So it could reach that part. You know, it could get to here and just stall out a bit. It wouldn't surprise me one bit. In fact, that would be very good because of the strong impulse we've already had. You know, since April, we've had this strong move up in Cameco. And it is good. It's a good sign. See, Cameco is the largest uranium company there is. So if a hedge fund looking to invest into the uranium sector and you've got big money to play with, you're not going to deal with some of the smaller companies. You just can't. You'd move around the price a little bit too much. And when you look to sell, you would probably take the price down to zero. I mean, you would just have that much of an impact. So what you need is something with a lot of volume and a bigger market cap. So CCJ is perfect for that. So therefore, when I look for breakouts out of long consolidation periods, you know, like this, where it's just kind of been going sideways for a very long time, I look to see how the big money is doing, how the bigger companies, bigger market cap stocks are doing, and it's been doing great. You can see also this horizontal resistance, which held up from 2011 to 2014. It held as support. It just broke out of it, just pierced through it. So the uranium stocks are looking great, every single one that we've looked at. All right, here's Uranium Energy Corp. It had a drastic drop back in 2009, and you know, if you kind of ignore that, it's been just kind of angling down the entire time from 2007 till now. This is similar to the CCJ that we just looked at. Look, there's a peak in 2007, peak in 2011, you know, a minor bump. Here for Uranium Energy Corp, it happened in 2015, but for CCJ, it happened in 2014. Let's go back to that chart. See, there's the 2007, the 2011, the 2014. So we've had similar moves, and it's probably breaking out of, you know, a descending resistance line. Well, if I touch 2017 with 2011, it hasn't gotten there yet. Now, if I touch the 2017 with the 2015, yeah, it did, and had a very strong move up back in December. So we're looking potentially again with this stock to get to this. So with this stock, we're potentially looking to move up to this resistance line and go sideways for a while. I don't expect it to just sell off and like touch the resistance like it did here in 2010 and then sell off. Touch the resistance here and then sell off. I think the mood has changed with respect to uranium. So I would expect it to at least maybe go sideways for just a couple of months and then kind of go up. In fact, my guess, taking a break from looking at these uranium stocks and talking about gold, I suspect, because we've also been looking at gold on this channel, I'm kind of expecting gold to start making its big moves now, and I think that might take uranium's thunder. And here's why I think that. So when I go to the uranium ETF with the GDXJ ratio, so I'm looking at the ratio, and look at what happened from March of 2020 here. So this is the Corona dump. This is right after the Corona dump reached its lows. What made its big move? Right? This ratio went down. So that means GDXJ performed the best. And it performed the best up until around August, which is when gold stocks peaked. Since then, uranium has made its big move. I would suspect that gold stocks would start to perform pretty well right now, making this ratio come back down a little bit, and then ultimately another move to shoot up. Right. I mean, I do expect the uranium stocks to outperform gold stocks. Look at where it was in the peak of 2011 when uranium stocks and gold stocks were at their peak. It was the ratio of URA to GDXJ was 0.92. Right now it's 0.40. So almost a 2.5 times outperformance. All right, looking back at the stocks again, here is UR Energy. URG. This looks a little different than some of the other stocks we looked at, but that's because it doesn't have the 2007 peak. If you were to look at, here's the 2011 peak, here's a 2014 one, and it goes here. Let me put out a log chart and see if there's some type of a, yeah, so yeah, a little bit of a move here, and again in December 2020. So a lot of these stocks had their breakouts in December of 2020. In fact, it's heading up against this upper resistance line. This horizontal resistance, you want to say there's the 2014 high. It's heading towards that. Right now it's at 146. It's another 50 cents to go to get there. All right, so this is the global uranium ETF, the URA. We looked at the URA to GDXJ ratio. Here is just the straight up URA. They've got a lot of position in CCJ, Cameco. So if you just play single stocks, I mean, you could just buy the Camecos. But URA, it's a good stock to own because, of course, it's an ETF. It gives you the exposure around. But take a look at this. I've developed this ARC, and I'm not completely confident in this ARC. And the main reason is because there's no touch of the right side. And one of the things that concerns me about this ARC is the fact that here we're having this strong move up right now, right here, since 2020. And generally when you get a strong move up, like if it's going down for a long period of time and you get that one strong move up, this bottom part would be near the middle or the absolute midpoint of this. So it'd be more like this. And so what that would end up being is this bottom would be right at the smack in the middle. You'd get this big move up and then a bigger period of consolidation before it moves up. But then if that's the case, now if that's true, that would mean we're going to take until 2028 to get to 66 in the URA. It'll triple, but it would take 7 years. Now that's, I don't doubt that the commodity cycle is going to last 7 years. I mean, we've had consolidation for 7 years. I mean, look at here. If we take a look at this, long period of consolidation, I mean, this is a 7-year time frame in which it's consolidated. So the bull market could last easily 7 years, and I wouldn't be surprised by that. But now take a look at the GDXJ. So here in 2016 we had that strong impulse up. You can see it's closer to the midpoint of the bottom of my arc. And then we had a very long period of consolidation, which lasted from August 2016 until, January 2019. Two and a half years or so of just going down. And then it finally decided to move up. You had the Corona dump, but now it's consolidating again. I'm more confident in this arc. And it had a very strong move. In fact, the GDXJ was also up 15.3% last month. So it's not just the uranium stocks. Gold stocks did well in May as well. We're looking to see how June goes. It's going to be 4.5 hours until, at the time I'm recording this, another 4.5 hours until market opens here in the United States. It's going to be a Tuesday. Gold was up in the Asian markets, in the Europe markets for Monday. And, I'm more confident in this arc, and it takes us to the end of 2023, but I do believe the bullish cycle is going to last longer. So when I say I believe that, GDXJ is going to get here by 2023, I don't think it's going to stop there. I think it's going to keep going. So for GDXJ, it's just a triple from here and potentially higher.